Welcome back. African Rainbow Minerals reported a 49% plunge in half-year earnings. That's as high unit costs and lower production volumes in coal and iron ore weighed on the company's earnings. Group CEO Phillip Tobias joins us now with greater insight on the performance. Thank you so much for your time, Phillip. Of course, the first thing that jumps out at me is the lower production volumes for iron ore. And of course, you cited the impact of ArcelorMittal. I do know that there are still a lot of engagements there on ArcelorMittal, even though they said that they would be winding down and things should stop in the second quarter of this year. But just talk to me about the kind of impact, the level of impact that the ArcelorMittal long steel closure has had on African Rainbow Minerals.
Yeah, no, thank you very much to you and your viewers. I mean, pleased to be part of this interview. I mean, we saw a 49% reduction on our headline earnings for the same period, comparatively speaking. And that at the back of, firstly, I need to mention that yes, the 22% reduction on the iron ore price itself. And also, as you rightly said, I mean, in terms of Beeshoek mine, we basically sell that ore to ArcelorMittal. So the announcement of their closure of the Newcastle, the long steel plant, obviously have a direct effect on the production from Beeshoek. So last year we produced or delivered, they took about 2.4 million tons of ore. At this point in time, I mean, for the mine, Beeshoek, we're looking at a reduction to about 1.4 million tons. And unfortunately, at 1.4 million tons per annum, as a mine, a big mine like Beeshoek, is not sustainable because the installed capacity is around 3 million tons per annum. Yeah. So at this point in time, we don't have a long-term contract with them. Yes. I mean, contrary, we used to run at about 12 months or 24 months contract. So now it's a month-to-month type of arrangement, where we providing them as per their needs based on what they require. Yes. We know that the impact of this, I mean, should they really not proceed with their business, it means that we'll have to review the future of Beeshoek mine as well in terms of what we do. At this point in time, we're looking at a number of scenarios, yes, and we will be landing in the next few weeks in terms of where we land with Beeshoek. But what we know that was very clear was with the capital that was approved for the financial year 25 of replacing the fleet, of cutting back the mine, stripping the waste to open up the ore, we basically had to slow down because the future is uncertain.
All right. Well, thank you so much for clearing that up, because, of course, now we are looking at contingency plans in case that actually does become finalized, that long steel business will be closed. Let's go back to the iron ore price. You mentioned a 32% reduction in the iron ore price there. Is this majority to do with China? But also, are there no signs of turning the corner on that front?
Just for correction, 22%.
Oh, 22,
reduction. Yes. Yeah, 22, not 32, year on year. Yes, I mean, this has to do with China's economy. I mean, as we well know that there has been a slowdown in terms of the growth, performance on the China side. Previously we knew them as a double-digit, type of growth. We've seen them coming down to as low as about 4.5%, GDP numbers, which are quite really not the familiar numbers that we are used to. Yeah. So, and also, if you follow the story very closely, you would have seen the construction industry really suffering quite a lot, to a point where even some of their major construction companies had to really go under the water. So that is basically the impact on the price. But we have seen a recovery, I mean, of this price, to about $107 per ton the past few weeks. Before the imposition of the tariffs, so with the double imposition of 10% some few weeks ago and 10% some few days ago, I mean, we saw a price slump up to about $101, $102 a ton.
And talk to me about the dynamics playing out in the PGM division. Of course, we did see your volumes they're going up slightly, but also some operational losses there, which is quite interesting also, Tobias, because this week we've actually seen quite a ramp up in the share prices of PGMs, but also looking at countries kind of pulling away from their zero emission targets, where now people are actually saying that PGMs are going to be relevant for maybe a lot longer than initially anticipated.
Look, we are quite optimistic in terms of the future of the PGM platinum group metals. I mean, we do believe that it's actually in deficit now if you look at the fundamentals. However, there have been a destocking process that has been taking place. I mean, around the COVID area when the price shot, obviously the manufacturers overstocked because they didn't know what was lying ahead of them with COVID.
Yeah.
So currently we are undergoing destocking. Unfortunately, we don't know the magnitude and that, but we do believe that it's just a question of time that we'll start seeing some rally in the price. I mean, lately we've just seen the rhodium price increasing from, it has been hovering average $4,700 an ounce, and we're now seeing it at $5,000 an ounce. As to what could be the cost, we also don't understand exactly. It could be the issue of thrifting, where people start shifting from using platinum or from using palladium, or where they were using rhodium, going back to palladium. I mean, the manufacturers actually, at times, depending on where the prices are, if the prices are extremely high, they look for an alternative means, where they look for alternative product. But in terms of our performance, I mean, yes, a slight improvement in terms of ounces, and that coming from Bokoni mine. Bokoni is actually a project in development. I mean, we've acquired it from Anglo American Platinum in September 22. We paid the 3.5 billion rand. And then we decided that we're going to mechanize this mine because they were mining it conventionally. So we decided that we were going to mine the UG2 economic reef as our future. So we are basically in the production ramp up. We've just commissioned a 60,000 tons per month UG2 plant. It came into production in October 23. So we are basically building up. So this increase is a result of the increase in plan in terms of what Bokoni is supposed to do. But we are not anywhere near where the optimal potential output is for Bokoni. We believe that it should be about 240,000 tons per month. But with the current platinum group's cycle prices where they are, we cannot really invest that amount of money. We have to apply what we call prudent and responsible capital allocation, which is what we are doing now, using what we have and maximizing that. We are currently trying to put a lot of high grade into the plant so that we can enhance our revenue output and also our production output as well.
Well, it is quite encouraging to see the share price movement today. Last time I checked, ARM was up about 4%, and really just the broader PGM sector. So really hoping that positive momentum is coming back there sustainably. Thank you so much for your time and for your insights there, Philip. That was Phillip Tobias, CEO of African Rainbow Minerals.